Okay, hello and welcome everyone. Welcome to JFD Brokers Traders Tea Time with me, Darius from Anucauskas. Today is the 21st of March 2019, so welcome everyone. Welcome to this Thursday's afternoon session where we're going to have a look at a few instruments, as always. But before we do that, let's quickly have a read through our risk disclaimer. The content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, let's quickly jump into the charts. Now, the first one I want to touch on here is the S&P 500. Now, looking at this index, and I was covering this index in one of my previous videos recently this week, and basically I was talking about this potentially moving further up here, but of course yesterday we had a bit of a down day. The index closed in slightly in the negative territory. Today it already opened positive. It is already trading in the positive territory. It's trading above its pivot, which is around the 26 level. So let's actually find some good potential areas here, potential breakout areas, because you can see that this is a bit of a tricky trading here happening right now. So in a way, what we could do here is wait until we see a nice good push towards these recent highs that we saw here back on the 19th of March, and that was approximately around the 28.45 level. So basically, in a way, if we see a nice push above the 28.45 level, this could increase the chances for S&P to travel further up here towards the this next potential area of resistance near the 28.63-65 area, approximately there. Just to kind of show you what that level was. It was the low here of the 8th of October last year. So very good potential area of support that this time could roll out into being a nice area of resistance. But again, for us, before we could consider that area, we would like to see a nice good push above the 28.45 now. But looking at this index right now and where it's trading right now, I mean, it would be interesting to see, of course, if it would receive a follow-through of yesterday's negativity today. So basically, for now, yes, I mean, it is pushing higher. It is currently trading above its pivot, but let's see. Of course, let's not rush into this yet. For a better confirmation of the upside, we will wait until we see a nice good pop above the 28.45, and then of course we will target this slightly higher area that I've mentioned, the 28.63-65 approximately there. Now if that gets broken, now this of course could open the path towards much higher areas. Of course, we will then target areas like the 2900 there and above that. But for now, it's too early to talk about that. First, let's see if this manages to break above the 28.45, and then we'll take it from there. In terms of the downside, if let's say this suddenly decides to drop back down below the pivot and starts traveling below this little area of support, so the yesterday's support area, basically around the 28.14 area, something like that, 14.13. basically you can see that it coincides, this area here almost coincides with the S1. So in a way, for today, if for example you see this one reversing back down and traveling back below the yesterday's support zone, then, well, I mean, brace yourselves, we could see further declines. Of course, this could also place the index below the 21 EMA, below the S1, which is around the 28.10 area approximately there. And then of course, yep, further declines could be possible. We could then target areas like, let me just quickly put that on the chart. Of course, the psychological 2800, that would be on our radars initially, but if that fails to withhold, yep, the 27.65 zone could be that nice potential area for support. And if you can see here today as well, it coincides here with today's S3. So for now, guys, certainly probably the small little recommendation could be just to continue observing the price action. Don't rush into this yet, and wait for a confirmation break first before doing anything with this index, because for now, like I said, it is at a very tricky spot, and let's wait for either a break of the 28.13 zone on the downside here, or a break of the 28.45 level on the upside. So keep your eyes on that one. Euro dollar, now very interesting developments here. So basically we've posted an analysis here, quick shout out here on TradingView today around euro dollar, and basically yesterday, of course, this pair managed to travel higher, break this downside resistance line, but currently it is it seems that it wants to get back below this downside resistance line. Now if it closes below this downside resistance line, now this raises concerns of course about the near-term upside scenario. Of course, the day is not finished yet. We might see a strong reversal by the end of the day here, but again, keep your eyes on this downside resistance line that has been running here from the highs of the 10th of January. And in a way, if we see a daily candle close here below this downside resistance line, then, well, I mean, the next thing that you could watch out for here is, of course, this little, in a way, tentative, but still a support line. So if we see a drop below this, and eventually a drop below the 113.50 level, approximately there, this could slide further down towards the 113 area, or even the 112.90, which also acted as a very good area of support previously here on the 14th of March, and also back here on the 5th of March. So yep, there are some good potential areas of support, but again, for now, you can see that this is what's happening. Continue observing this downside resistance line, see how it's going to perform. If we see now let's say this 4-hour candle reversing back up again, and let's say closing above this downside resistance line, then there is a good chance we could see maybe a good reversal back to the upside here. But again, for a better confirmation of the upside, we would like to see a nice good push back above the 114 level, and only then we'll target higher areas. For now, we're going to remain neutral and just continue observing the price action here. But if this starts dropping lower and breaking this upside support line, and then eventually the 113.50 area approximately there, then yep, further declines could be possible. Jumping into Euro Swedish Krone, you don't look at this one probably very often, but it is at a very interesting spot right now. So, of course, you can see that up until around the 15th of March, and since New Year, basically, it has been trading above this nice upside support line. But yeah, as I said, it got broken here on the 15th of March, and the pair traveled further down. So now it seems that it could be finding good support near its lows that we saw here back on the 13th of February, which is around the 10.40 level, approximately there. Now, of course, if this struggles to withhold, then if we see a break below this level, then yep, further declines could be possible. We will then target, let me just adjust this level slightly, guys, and let me just put the horizontal line. Of course, then we will target this little area here of potential support near the 10.3840, but if that fails to withhold, then we do have a much better area of support here near the 10.3330 area. So previously it acted as a good area of support here on the around the 29th of January, and also played its key role as resistance previously as well. So but especially on the 25th of January. So basically this area around the 10.3330 approximately there could be that next potential area for support if we see a break below these two levels here, the 10.4040 and the 10.3830 area. Again, for now, judging by this picture, it seems that it is quite overextended here to the downside. So in a way, we could see maybe a bit of correction here to the upside, especially if we see a push back above this little level here. Let me just quickly put that on the chart, and that's approximately around the 10.43 zone. So if we do get a nice push above the 10.43. We could expect maybe this one to travel a little bit higher towards some of these key areas of resistance that previously acted as good areas of resistance, one being this one right here near the 10.49 level. So it's near the highs of the 18th of March and near the lows of the 6th of March. So very good potential area of resistance here, but again, before we could consider that, we would like to see a nice good push above the 10.43 level. But for now guys, we're just going to continue observing this. If this decides to actually continue traveling south, a break below the 10.44, it could lead towards further declines, so keep your eyes on that one. Jumping into USDCHF now, of course yesterday the FOMC kind of well, after the FOMC statement, the dollar took a hit, the US dollar took a hit, and you can see that the nice sharp slide to the downside that we saw here on USDCHF. It managed to break some of these key areas of support, initially of course breaking the 0.9950 level, and then eventually actually breaking this other key support area marked by the low of the 28th of February near the 0.9920, and managed to reach the 0.99 zone, maybe just slightly a few pips below that. But this area, the 0.99 area, acted as a good area of support from which the pair rebounded and pushed higher. Of course, given looking at this picture right now, certainly this is slightly more to the bearish side. In a way, we could continue traveling lower here, especially if we see another drop below the 0.99 level. So we're not going to rush into this yet. If we see a drop below the 0.99 zone, then that's wonderful for the bears. We could see more of them joining in, potentially leading this pair towards the 0.9850. And don't forget that we still have this upside support line in play, which is running from the lows of February last year. So this very long-term upside support line, this could also be a very nice target for this pair, especially given the fact that it is currently getting hit by weakness. But again, before we could consider further declines, we would like to see a drop below the 0.99 level first, and then we will target lower areas, because at the same time it could actually retrace a little bit higher here, and it could move a little bit higher, even actually could move above the 0.9950 level back up again. But the only thing is, don't forget that we do have another downside resistance line here, or should I say another line here, which is the downside resistance line, and that has been running here from the highs of 12th of March. So basically the highest, it's not the highest point, but one of the highs of March. And in a way, if we see this one pushing back above the 0.9950, well, the bulls shouldn't be getting very comfortable yet, because in order to consider higher areas, we would like to see a nice good push back above the 0.9980 level, and only then target higher areas, because this would of course lead to towards a break of this downside resistance line first, and then of course if we see a nice good firm push above the 0.9980, then yep, we will target higher areas. For now, in a way, even if we see a further correction here to the to the upside, we could see something like this happening, basically where it's going to test, it could test the downside resistance line, and then if it fails to drive above it, then yep, we could see more bears jumping in here, potentially taking advantage of the higher rate, and then leading this pair back down again. So, but for those who are more on the cautious side, you could in a way just wait until this drops below the 0.99 level, and then aim for lower areas. So keep your eyes on this one, guys. Very interesting pair. Let's see how this is going to play out later on. And the last pair I wanted to quickly touch on, and that's GBPNZD. Now, what I wanted to show you here, guys, so basically it continues to move lower, but it found good support here near this the 1.9020 zone, so, or in other words, near the psychological 190 level. So in a way, keep your eyes on that one. You can see that I do have another level here slightly below, which is the 1.8950 zone. So that is a very nice area of support here, back on the 25th of February and also back on the 20th of February. So in a way, even if this pair decides to drop back down below the 1.9020 and then even below the psychological 190 level, keep your eyes on this 1.8950, because that could be that last resort for the bulls, where they could jump in here and potentially maybe drive this one back up again. Yep, this could be a nice area. But if it starts failing, and if we see the bears kind of pushing this pair further down, let's say, and even closing the day below this level, below the 189.50, then, well, further declines could be possible, and we could then aim for the 188.20 or even lower. But for now, this is where the pair is. The pair might not even travel lower here below the 190.20 or even the psychological 190. If, let's say, this travels a little bit lower here but actually even fails to get below this, then yep, we could see maybe an earlier reversal back to the upside here. We're not going to go crazy with the upside here yet, because still, if it travels higher, if it could potentially get held here near this 200 EMA here, which is around the 1.9195 zone, or in a way, if you wanted to round it up towards the 192 area. So that's why, guys, for now, keep your eyes on some of these key support areas, like the 190.20 and the psychological 190 level. So if it fails to drive below that, then yep, we could see maybe a bit of a correction here back to the upside earlier, and then we will target this 200 EMA around the 191.95, or even, like I said, the rounded up the 192 level. Okay, guys, I hope you found it useful. Thank you very much for watching and listening. And if you want to join me tomorrow morning at my Trader's Espresso, and that's 7 o'clock GMT time. But for now, I hope you have a wonderful evening, and I'll see you later. Bye-bye.